All right, welcome back everyone. Thanks for joining. In this video, we have a lot to go over. We're going to be looking at my portfolio, which is a story fund. This is an aggressive growth-centered portfolio with the goal to outperform the S&P 500 over a 5-year basis. So by the end of 2025, I want this portfolio to outperform the S&P 500. Now, the way that I intend on doing that, on outperforming SPY, is buying consistently fast-growing, compounding companies at a reasonable or undervalued price. That is essentially the strategy. I have a huge tilt towards software companies that have ample total addressable markets. They have huge room to expand into. And most of them, I think, have products that are incredibly resilient, products with wide moats. Many of them have a huge amount of profitability as well. So many of these companies they're not money losing companies. Many of them have a huge amount of free cash flow. So with that mix of companies, I think I have a decent chance of outperforming the S&P 500. Now, let's go ahead and jump into the portfolio here. This is called the story fund. Unlike a dividend growth portfolio, I'm not looking for companies that have a large margin of safety. I'm not always focused on protecting the downside. I'm more focused on opportunity cost. Some of the biggest losses you can have in investing is missing out on enormous opportunities. It's not the companies that you lose money on that are the big problem. It's the companies that you don't make money on, that go up 5 or 10 times that you didn't buy because of XYZ reason. Your analysis wasn't good on it. I've watched a lot of interviews of different investors, and they consistently say that their biggest regrets or their biggest mistakes were missing out on some of the greatest growth stories in the market. It wasn't companies that they invested $1 million or $2 million or $10 million in, and then they went to zero. Those weren't their biggest mistakes. Their biggest mistakes were selling out of Home Depot when it went up 20 times, or not finding out about Amazon, right? Not realizing that investment. What I want to do with this portfolio is focus more on that upside than protecting the downside. So I'm focusing on a lot of companies that I think have these shared characteristics. They're typically category winners. They're the best in their industry. They have first movers advantage in many cases, or they're just moving the quickest. They're taking the most market share. They're in industries that are relevant in the future. I don't want antiquated businesses that are slowly going down in value, that they're trading at a slight discount. That's not what I'm looking for here. I like to focus on companies that offer convenient, easy, simple products that make people's lives more convenient. I strongly believe that convenience always wins out. Even if it's more expensive, people prefer convenience. I like companies that have a highly scalable business model. By this, I mean companies that have a low marginal cost of replication. They can sell their product over and over again. If you work in software development, you learn that you can write one web page. You can write one thing and sell it 1,000 times or 10,000 times. The cost of replication is incredibly low with software. So most of these companies are software companies because they fit into these characteristics. Most of them have low marginal cost of replication. And I want companies that have a large market cap potential, meaning that they're not very niche, small potential companies. I don't want something that markets to a very small subset of people. And I've tried to avoid companies that do that, even if they're good companies. Like the New York Times, for instance. That's a company that I think is a really solidly ran company. It has no debt. It has a digital product. I just think the market opportunity is very small because only a certain amount of people and a certain type of person is going to subscribe to the New York Times. So what I focused on instead are companies that have massive market opportunities, and that way they have ample upside with their market cap. Now, not every one of these companies are going to ultimately succeed. Some of them will fail, but my goal is to have the best batting average as possible. I want as many of these companies to be successful as possible, and hopefully the big winners will make up for the losers. So this is the collection of companies. Most of them I'm in the green on. Alibaba, I'm still in the red. I've been wrong on this one so far, but we'll see if eventually I'm proven right. It's been only like a month or two since I've invested in this one. Now, before we jump into all of my holdings and go over them, let's take a look at the story fund against the S&P 500. My portfolio, the story fund, is the blue line. The S&P 500 is the red line. And this is accurately benchmarked as if I deposited money into each of these. So it just shows the performance as if I deposited my money into each one. Right now, my portfolio, the story fund, has 23.56% returns, and the S&P 500 has 19.82. So I'm beating it by 3 or 4%. Not a whole lot. My goal is to get further and further ahead of the S&P 500, not fall behind it, but we'll see how this turns out over the next 5 years. We still have a lot of time left in this competition. If you want to follow along with the progress of this, just make sure you subscribe to the channel and you'll see this updated every single week. Now at the top of the list, we have IGV. This is a tech software ETF focusing on smaller market cap companies, so it doesn't have a lot of the big tech companies in it. And I think this one is a good catch-all for any of those SaaS companies that will ultimately be the big winners. I think it will catch whatever company that's software in the US that ultimately grows to massive size. So I'm very bullish on this industry. I think it will outperform SPY over the next 5 years. I think that software and SaaS companies still have a lot of growth. That's why I purchased into it. Google has been one of the best performing stocks in the market in the past year. You can look at my returns with this company. I'm up $4,188 on a total value of $11,144. So this one has performed phenomenally well. And I did say at the beginning of the year, close to the beginning of the year, I came out with a video called Why I'm Buying Google. And I literally said that this stock is the one that I thought was the best buy in the market. So Google is number one. That is my biggest conviction. And I think that in the market right now with growth companies and the prices they're trading at, I think Google has the best risk reward. I think it's the best growth investment in the market right now. So it's my biggest conviction. It's one that I'm building up. I think that I have a very high likelihood of making money over the next 5 to 10 years and a very low chance of losing money. Over the past trailing 1 year, Google's up 86%. That's pretty incredible. And I still do not believe the company is way overvalued. I think if anything, it's closer to fair value. But I think Google still might be slightly undervalued based off of its growth potential. If we look at Amazon, this is another company that I think is undervalued right now. And I really believe that. I think in 5 years, Amazon will be significantly bigger than it is today. Every time I do more research on Amazon, I realize that their dominance over online retail is not getting to the finish line. It's not like they're close to dominating online retail. They're really about halfway through this process with building out their infrastructure, building out their logistics, buying more planes and cars, doing last mile delivery, things like replacing humans in their factories with robots. They're going to be doing all this stuff over the next 5 years, and it will create a lot more value for Amazon. I think that just their lead in their core business is enough to give this company continued growth, but then they're always also reinvesting into other business opportunities. They're constantly reinvesting into like cloud gaming. They're reinvesting into movies and TV series. They also just announced that they're going to be competing with Square, offering point of sale devices. Amazon is a never-ending, growing, compounding beast that I do not see slowing down anytime in the next 5 years. And it has trailed the performance of other big tech companies over the past year. So I think that this company is clearly undervalued right now. I think over the next 5 years, you're going to see Amazon much higher than today. Now, Spotify is the next biggest holding in my portfolio. This is a company that I see as an asymmetric bet. Either I lose a little money on it or I make a lot of money. Either they're able to exploit their massive customer base, 300 plus million users that are very active and engaged on their platform. Either they're able to make money with them through optionality, through being creative with their platform, or they're not. And eventually they just get crowded out by other services. Those are the two options, but I think that over time, once they even get to bigger scale, they'll be able to increase margins over time. That's my thought process with Spotify. With most companies, the margins get smaller and smaller as they get bigger and bigger. With Spotify, I think the margins will increase. We have Salesforce. This is a company that I'm very bullish on. I think it will continue to grow on pace. Netflix is a company that's turning around. I used to be in the red with this company a lot. I was in the red by like $2,000 or $3,000, and now I'm in the green by $391. So COVID shut down their production, and so they came out with a lot of series that they weren't their big series, and they didn't have a lot of fresh content. Now they have a lineup that's pretty incredible. They have movies with Jake Gyllenhaal. They have movies with Leonardo DiCaprio. They have movies with Dwayne Johnson and Ryan Reynolds. They have a lot of different series coming out that look very interesting and are receiving a lot of positive reception on YouTube. I think that late this year, the overall reception with Netflix is going to be a lot stronger. The thing I'm worried about with Netflix is their gaming. They're moving into gaming. I don't think it's a huge bet by them, but all the advantages that Netflix had with streaming, I don't think really exist in the same way with gaming. I think it will be very difficult for Netflix to create any type of huge, worldwide, massive multiplayer compelling game. They're probably going to start out with simple single player games, but I don't see that as something that will move the needle a whole lot for this company. So as far as I'm concerned, my investment thesis on Netflix is just investing in their core business. The gaming is just a plus. Microsoft's a company I think is fair value to undervalued right now. Apple I'm still very bullish on, but it has gone up quite a bit. I think it's moving up into the category of fair valued, maybe a little bit overvalued. We have Facebook. This one's widely considered undervalued by these smart money investors. Big name investors and institutions are buying into this company heavily. Adobe, I don't think is undervalued. I think it's a good stock, probably overvalued. Same thing with Atlassian. This one has gone up like crazy. I've made a lot of money with this holding. I'm glad I bought into this one before the big run up. The same thing with Twilio. Right now, I think that Alibaba is undervalued. I think this stock is undervalued. I think that eventually I'll be proven right with it, but as of right now, I've been invested in it for like a month, so time will tell. Now with PayPal down, all of these companies, I'm actually not buying any of them right now. They've all ran up quite a bit, and unless one takes a big dive, I'm not going to be buying into any of them. I've been putting most of my new money into Salesforce, Amazon, and Google, and I put a little bit more into Spotify. Those are ones that I consider better value right now. Now, that's all for this video. I hope you enjoyed it. If you like this type of content, be sure to subscribe to the channel. Also, if you want bonus episodes, exclusive content, access to a very active Discord community, I'm on it every single day. You can check out the Patreon. There's a link in the description. Other than that, I'll see you in the next one.